Okay guys, so in this video I want to start out by explaining the difference between major and minor swing levels, because that is something that is absolutely necessary for you to be able to identify trends in the Forex market correctly. So first off, for major swing levels, they are the top and the bottom of our impulsive moves. Let me explain that. An impulsive move would look like this. Here's the bottom of our impulsive move. This is the move that breaks through previous structure. That would be our impulsive move. So the bottom of this would be a major swing level. The top of this move would also be a major swing level. Now, as we get this pullback, the bottom of the pullback would be a major swing level. And then we push up as we break through previous resistance, and we get the top of an impulsive move. This is a major swing level. Then we pull back, the bottom of the pullback, major swing level, and the new structure high as we push up here and break into new highs is another major swing level. So there's not really any way to make this completely objective, and I know that sucks. I know it's a lot easier with completely objective rules, but I've not found a way to make this completely objective yet. But this is the way I identify major swing levels, is the top and the bottom of my impulsive move. Remember, in a trending market can look like this and do this and then go up and then do this and then go up. And the levels we're paying attention to are major swing levels during a trending market. What I mean by that is we have a high here. Once we break through that high, what's our rule? Once we break through that high, we can't see the market come down and break through the lowest low of the pullback. If it does, then we do not consider this market still in an uptrend. But as long as we stay above it like we have here, then we are considered to be still in an uptrend, especially when we come up and start breaking into new highs. That confirms the continuation of that uptrend. So the major swing levels in this case would be our initial starting point, our new structure high, our pullback, our new structure high, and our pullback. Now, the thing is, you're not going to know this is a major structure level or a major a major swing level until we break into new highs. And that's just because this is the level we don't want to see broken by the trend, so that's totally fine. We need to see the market break into new highs before we know that our pullback levels are the bottom of a pullback. There's no way to know that this is the bottom of a pullback until we break into new highs, because the pullback could continue, right? So with that being said, hopefully now you understand what major swing levels are. In terms of minor swing levels, it would be everything you see in between. So this would be considered a minor swing level. This, minor swing level, minor swing level, minor swing level. In terms of a trending market, we do not pay attention to those. We do not use those for anything. We'll do a bearish example now though, and what I want you to do while we're looking at this chart is try to point out the major and minor swing levels for yourself. I'll give you about 5 seconds. Pause the video if you need to and try to point those out before I do. Hopefully you pause the video and have those pointed out now, but this is how drawing out major swing levels in this bearish example would look. We would have a starting point up here as a major swing level. The market would pull down. What are we waiting on? An impulsive move must break previous structure. So now that we have this big move down, we can see that it actually broke a previous level of structure. So now we know this is an impulsive move. Then we get a pullback, and we don't know that this is the top of the pullback until what? Until we actually break through this support level. Once we do, we can now count this as a major swing level as well. This is another major swing level, and we know that now this is a major swing level. Once we break through that, we continue pushing down, and here would be our next major swing level where this heavy pullback starts. Now what our next swing level would be is the top of that pullback, which is right here. After that, the next impulsive move we have. Remember, an impulsive move must break our previous level, our previous major swing level. So if we draw a line right here, you can tell that this would be our next drawing point. This would be our next major swing level. I know a lot of you probably said this was a major swing level, but we don't have a break of our previous major swing level right over here. So with that being the case, there's no way that we can count this as a major swing level. So this would be the way we would draw out this trend. Then the top of the pullback, another major swing level, pushing down, we have to break and close below structure. We do that right there. So now we have a push down, and this is our next major swing level. What's the next thing we need to see? If this market's going to reverse and we're going to find another major swing level, we need to wait for the break of what? This level here. After we get a break of that level, we can find our next swing level before the market pulls back, and then continue looking for major swing levels in order to determine trends in a specific market. Now, again, there's no way to have this completely objective, and it's something that you will just have to spend time learning and understanding. Let me show you an example of what I mean, though. One of the things that I was talking about is this, right? We have a situation where we have what? A major swing level here, because it's the bottom of an impulsive move. As we push down from our pullback, bottom of impulsive move, pullback, break, this is our impulsive move. So the bottom of that is determined once we get this big push up and we break above this resistance. With that being the case, this is definitely a major swing level. This is definitely a major swing level. And in terms of this now being a reversal, we're considering this market to be in a possible reversal until we break and close below here. And this being a major swing level, what's our next major swing level? The bottom of the pullback, right? But we can't call this the bottom of the pullback yet. Why? Because we don't know if it's going to be the bottom of a pullback. To show you an example of that, if we move this market forward, you'll see that we start to get another lower low right here than the previous low. So now, is that the bottom of the pullback? No, we don't actually know the bottom of the pullback until this level's broken. So we have to hit play. Just kidding. Apparently Market Replay doesn't want to play right now. We have to hit play. Still not working. Okay. I guess you'll just have to hear a bunch of clicks. As you can see, we eventually drop down even lower at this point. So now we still can't consider this the bottom of a pullback. The reason being, we haven't broken above this level. So we still have to wait and see if we can eventually break through this previous resistance level. Once we get a break through that previous resistance level, then we know we have a major swing level. And this being the case, this only being known after the break of this resistance level is totally fine, because the only reason we're using this major swing level is to identify that the trend is still intact. At this point, since we have identified this as a major swing level, we have our low to high, our major swing level after we see the break through this, we now know that we are still in an uptrend. No matter what happens in between, consolidation wise, unless we break through our previous major swing level. That's why it's okay that we have to wait for a break of this high in order to identify this as a major swing level, because the reason we're using this major swing level is just to give us an idea that this trend is still intact. So we need to make sure that the market and price in general stays above this swing level so that we can clearly identify that this trend is still intact no matter what happens in between. As long as we stay above 1.2144, then we are still considered to be in an uptrend. And that's the way we're using these major swing highs and lows. Hopefully that made sense. Now what I want to do is walk you through trending markets and kind of give you a lot of examples of trending markets to help you more clearly identify trend in your own trading. So let's do that right now. Okay, so here we are on the Euro Aussie 4-hour chart. And as you can see, in a normal situation, this would be kind of difficult to determine the overall trend of this market in certain situations, right? I mean, as you can tell, yeah, we're going in a slight uptrend, I guess you could say, but there's a lot of choppiness in between here, and this is the reality of markets. It's not what you see on YouTube when people are cherry picking stuff. I do it too. There's nothing wrong with that when you're trying to show an example, but what helps traders more, in my experience, is showing examples that look like normal market situations that are choppy like this. So let's draw this out with the rules that we have from a starting point right down here. So this was our starting point. We're going up impulsive leg to a swing high. We have a swing low to a major swing high. At this point, what are we waiting on? We're waiting on the bottom of the pullback to be our major swing low. This would be the bottom of our pullback. The only reason we know that is because it breaks resistance here. So at this point, the way we would draw this out is to our next major swing low, which is right here. And then the next major swing high, remember, we have to break and close above this high. We actually don't do that until right up here. So this would be our new major swing high. At this point, in terms of uptrend, we know that we are still in an uptrend unless the market breaks below this level of support. So if it helps out while you're practicing this and drawing it, do a horizontal line at all your major swing lows during an uptrend and all your major swing highs during a downtrend in order to be sure that you're still in line with the trend while you're practicing. So at this point, everything that happens in between our new structure high as we start pulling back, this would be our major swing level just because we've started to pull back now by more than a few candles. And if that's the case, after breaking here, when we start pulling back by a few candles, we know this is our next swing high. So we have that as our swing high. Now we're pulling back. Everything in between here is just consolidation. There's nothing that I personally am going to be trying to trade at this point in this consolidation. If I get a deep pullback, maybe I try to trade that, but this isn't a lesson on actual trades. This is just me showing you trends. So in this case, why don't you try to point out what our next level would be? Since we can see price right here, what would our next level be? Our next level would be the bottom of the pullback, right? All of this in between is consolidation, but essentially it's just the pullback of price. It's just relief from our new structure high. After we have that relief, we then push higher. Where do we break and close? Right here on these candles. Do we start pulling back by a few candles afterwards? We do. So now this is our new structure high, new swing high, and this would be our major swing low. Hopefully you're seeing that at the point that we break and close right here, we now have our new swing high. So we're drawing out our major swing levels, major swing, major swing, major swing, major swing, already circled, major swing, major swing. This we know is a major swing once we get a push up and a break and close above our previous level. So the way we would draw that out is like this, swing low up to swing high. At the point that we close above this, right here, we know that this pullback comes to here and this is our new swing high. We now need to break and close above this. Once we do, right here, we know that the lowest low of this is our pullback level, and the break and close of that is our new swing high. Hopefully, this is becoming easier and easier, pointing out swing highs and lows, major swing highs and lows. So at this point, we've been continuing in this trend from our starting point, and although it looks choppy, if you were to trade with this trend, you would have won 1, 2, 3, 4, possibly 5 different trades before eventually the trend ends. And that's something we'll discuss now. Trends do not last forever. They will end at some point. And our first hint, the first hint we have that a trend is likely to end is this right here. Here was our previous major swing low. How do we classify this as a major swing low? Well, we had our pullback to our swing high. The only way we can classify this as a major swing level is after we break and close above this swing high. So once we have that move, you can put a horizontal line here or circle it, do whatever you have to do to understand we're in an uptrend unless this level is broke and closed below. As soon as that happens, as it has just now here on the Euro Aussie, here on the Euro Aussie, just as this happens, you know that this is a market telling you that it's likely to reverse. This is a possible reversal situation, and after this happens, we're no longer looking for a bullish trade because we're no longer in a bullish trend. If we're trading with the trend, now what we need to see is the market either come up and break this resistance again, like so. I'll move the chart like this in order to show us we're back in an uptrend, and then we can start buying pullbacks again, or the market to come down and break below this support level. Because at that point, we have what I call a 1, 2, 3 reversal move. And if we break this major support level or major swing, then at that point, this would be considered a downtrend. So that was the bullish examples of this. What we'll do now is go to a different chart and I'll walk you guys through a bearish example of all this to be sure that you have a complete comprehension of how to read major swing levels and how to read trending markets in the bullish and bearish direction. So let's head to a bearish example of all of this right now. All right, so again, with a bearish trend, it's really easy to spot markets that are doing this and say, okay, that's a bearish trend. But a lot of times markets look more choppy than this, right? This is what a real bearish situation will look like, and it's choppy. You can't really easily point out major swing levels unless you have some type of rule, which is what I've been explaining throughout this entire video is my rules for major swing levels. So what we're gonna do is start right here with this being our starting point, our first major swing level. With this being a major swing level and this being our previous level of support, where's our impulsive move end? So what we have is a market pushing down, right? Swing high, major swing high, to a major swing low. And once we start pulling back by a few candles, I don't have an objective rule for this. Again, I normally want to see more than 2 candles and a decent pullback. But again, this is just something that'll come with experience. There's no real objective way to identify a pullback. Again, one of the better rules I have is at least 2 candles, and I want to see some movement. I'm not talking about 2 candles like this. This isn't really a pullback. This is just 2 really little candles before a breakout to the downside. I want to see an actual pullback, and I want to see it consist of at least 2 candles. Would be one of the better ways I have of identifying a pullback objectively. So if this was our impulsive move, this is our pullback, what are we waiting for next? We're waiting to see this level of support broken and closed below, because at that point, one, it solidifies that we are in a downtrend, right? If we have that break, then that is a guaranteed downtrend. If this was a reversal move, this would be our 1, 2, 3 move. We are now in a downtrend. We know that for a fact. Awesome. We're in a downtrend. And we also need this level to break so that we can classify this as the level that can't break for us to continue in a downtrend. Because once we have a break of this major swing low, we know that this is the top of our pullback. And the top of our pullback, our major swing level at the top of the pullback, is a level that cannot break if we're going to continue in the downtrend. And if it does break, then that's showing us a possible reversal. So in our case that we have on the chart, that does not break, and instead we get a continuation down with the market pulling back, making another swing high, major swing high. And the only reason we know that's a major swing high is because we get a push and break below this level right here, our previous major swing low. So at this point, what we know is that we cannot come up and close above our previous major swing high, and we need to close below at some point this level. But if the market was, let's say, if I can actually get market replay to work right here, the way we are looking at this in terms of actually placing trades is that we are looking for opportunities to go short or sell the market in anticipation that it goes further down as long as we stay below this level at 1.0851. As long as we stay below that, then we are consistently looking for possible short trades to ride continuation to the downside on this particular bearish trend. Let's see if the play button works now. Not so lucky, so I'll, with the power of editing, show you what happens in just a second. So as this pullback comes up, what we get is opportunities to go short and to ride this trend down, and we will continue to do so again unless this level ends up being broken, which is something that has not happened at this point. And instead of that happening, what happens? We get a break and close below this level. Again, keeping us in the bearish trend, showing us that this market still has momentum to the downside. We also can now point out our lower high that should not be broken if we're going to continue in this downtrend. There's our lower high here, and this level cannot be broken if we're going to continue in this downtrend. But here is when something a little bit different happens. At this point, what do we have? We have a push down to a major swing low, and then we have a break and close above our previous swing high. What is this telling us? What this essentially means, and we've talked about the mass psychology that charts show us, what this means is indecision. The market no longer wants to go lower because we broke above the previous pullback. So that's telling us that all market participants are showing bullish pressure, are saying that the value of this asset is undervalued. We think the price should be higher. But at the same time, we have a ton of market participants that think the value should be lower by this big move down. All this shows us is indecision. In trading, we call this consolidation. And this is the first sign that we are about to see consolidation and indecision. And also, it's our first indication to not trade. If we're going to be trend continuation traders, this is exactly what we do not want to trade during. This is when all of our losses will occur. So spotting, the first step of spotting consolidation is understanding trend continuation, because if you understand that this is a level that can't be broken, if we're going to continue in this downtrend, then you also understand that it means the market is having a lot of indecision if this level is broken, because we just went from being in a downtrend to being undecided if we want to continue that downtrend. So at the point that we create this move, what we do then is we have a level here that is now our new high. We have a level here that is our previous low. Before I can trade again in this specific instance, I need to see one of these levels break, and everything in between these two levels is just consolidation. It's just minor swing levels until the market shows me that it wants to continue in one direction or the other, like it does right here. So that's showing me now we have defined bearish pressure because we broke below this low, and I can look for possible bearish trades. And as you can see, instead of bearish trades coming to light, what we end up getting is this deep pullback that we're seeing right now. So at this point, this is one of the most confusing parts of trading, right? We have the break below that comes in right here. And I'm glad that this situation happened. I didn't even know this was going to be on the chart, but I'm really glad this happened because it gives me an opportunity to explain what to do during these difficult situations. So this would be our move from swing high to low. And during a regular trending situation, we know that we're still in a downtrend until this major swing level is broken, right? And that's true. Every bit of that's true, but sometimes we'll get these deep retracements. And this is a retracement to the upside. These deep retracements that start doing this. And what's important to understand is this is still considered a downtrend, but we can find a way to trade these little pullbacks. We'll talk a lot more about that a little later in the course, but this is one of those situations where if you're completely confused about the trend of this market because of big moves like this, just don't trade this particular asset. Don't trade the Aussie New Zealand. Move on to a different pair. If you're ever confused about the trend of a particular market, just move on to another pair. In this case, we know that it's still in a downtrend. So we'd still be looking for short trades if we're trading continuation traders until the break of this level. But we have such a big distance between the two that, again, later on in the course, we'll talk about how we can take advantage of some of these smaller swing levels and smaller retracements. I didn't say all that to confuse you, just to let you know that it's okay for you to be a little confused in situations like this. And when you are, you just don't trade. It's very, very simple. Just don't trade anything until the market gives you a for sure sign that it wants to go in a particular direction by either breaking through the previous major swing high. Then you know we have bullish pressure and we're looking for buy trades, or if this market continues lower and eventually breaks through this level, then we know we have bearish pressure continuing and we're continuing in this overall downtrend. So there's my bearish example of swing levels, including how to spot trends using them, how to spot consolidation using them, and what to do during confusing areas when identifying trend, which absolutely will come about and will happen, but we will help to clear some of that up in later lessons when we start looking at the strategies. We'll actually be using moving averages to help us define trend, which will make situations like this a lot less confusing. So I'm looking forward to getting to that with you. But before we do that, the next thing we are going to take a look at in this technical analysis portion of the course is major structure levels for trend continuation. So I will see you in that next video.